Hi, welcome to the Market Alert for Wednesday the 17th of August 2016. So yesterday, as I warned in the Market Alert, that the market could be sideways, and sure enough it was. If you have a look at the range for yesterday, you will see that from the low to the high in the first part of the session there was just 62 points there. So the market very quiet. The first trade was a loss of 10 points. The second one was a loss of 8, and that's how it more or less continued through. There was a pickup of 26 points in this trade, and this was followed by another loss of -4 plus 20 plus in the last one. It would have actually left you just in a small profit for the actual trading session if you go through each individual one, but as I said, I've sent a note out saying to forget it because of how narrow the actual range was. And again, you can see that when you look at the daily chart, the range just stuck in this sideways trading pattern at the moment. The market's just coiling itself into a sideways move, and once it does break out of this, you'll see a lot of movement to the downside. I'm just going to drag this over a bit. Have a look at the bottom. Notice that the down day yesterday sees the increase in volume, even though it's low volume and still below the average. The volume has actually increased on the down side there. So again, interesting to see how they're trying to hold this market up, because when it does move down, there is actually some genuine selling coming into this market. News-wise today, we've got crude oil inventories out at 3:30 p.m. and then it's the FOMC. So either you're going to get a good move in the first hour and then it's going to be quiet following the crude oil, and then that will be it until 7 p.m. There is going to be no change in interest rates because they're going to save that until the September meeting, which is the live meeting. So we're going to have to wait, unfortunately, as we've got to have the usual run up to the quarterly live meeting through the rest of August as well. And then of course we're going to get all of the speculation on whether they're going to increase or decrease interest rates as well. Unfortunately, there's not a lot we can actually do about that, but we should see an increase in the volatility, if not significantly actually, because of the lows in the implied volatility as well. Plus they may want an excuse not to raise rates, so they could actually think about actually letting the market fall, and thereby saying that there is uncertainty, etc., so they can use their get out of jail card as well, which I'm sure they would use if need be. Now at the moment there's no implied volatility, or there wasn't earlier. Let's see if it will load now. It does not like it's going to. No, it looks like the iVolatility website is down at the moment, so I can't give you an update on this, but suffice it to say nothing really changed yesterday, so it's still going to be down in the 9% sort of area, between 9 and 10%. So unfortunately that not working along with the bankers and most traders at the moment, all away, and that's why the market's quiet. Right, that's it for this morning. I know it's brief, but there's not a lot to report. As I said before, a bit of caution at the moment as the market trades sideways, but that's all part and parcel of trading. Is sometimes you just have to sit on your hands and wait until things pick up a bit. It's better to do that and preserve the capital than to squander it trying to make a few pennies here and there. Right, that's it. I will see you in tomorrow's. Thanks for watching.